So glad you could join us today. I'm Marlin Bohling, your tour guide to the ag commodities. Well, it is a Monday, and we thought maybe we would have some big moves today, one way or the other, partly depending on what the weather did over the weekend. Could they make planting progress or not? Some areas got a lot of rain, some areas right adjacent to it got none. So it's one of those years again. And today, as Tim Ross was saying, we have some heavy rains out in the plains, the central plains, some areas not. So let's take a look at the current market action. We'll go to the corn board here. Our quotes are provided by Bar Chart, and boy, oh boy, we still have quite a bit of pressure here. It sold off hard right at the opening bell, got as low as $7.98, and then it clawed its way back a little bit, and then it sold off, and now we're just kind of in la-la land here. You have the July corn now 11 lower at 802.5, so it has come back about 12 cents from that early sell-off that it had. December corn down 10.5, now down 10 3/4 at 740.5, after rebounding about 7 cents from its earlier low on the day. So already we've had pretty wild action. In soybeans, look at this. July down 31 3/4 at 16.53, and November down 22 3/4 at 14.92 per bushel. So big moves in the soybean trade here today. Now checking out our wheat market, we'll go first to Chicago. July now 14 1/4. Higher. Yes, I said higher. It said lower earlier, and now look at that. It's almost on the high of the day. And now 1063 3/4, still up 8 cents. Big, choppy trade in the wheat market here. Had a low of 1034 1/4. On the Kansas City market, let's see what it's doing. Well, July is now 9.5 higher after being lower this morning. We're now at 1115 1/4. Look at that rebound there of almost 30 cents already off of that early low. My goodness, this will take your head off today. July wheat in Minneapolis, spring wheat. We have July now 7 1/4 higher at 1173 1/4 after 1154.5 this morning. Chris Swift is here, and thank goodness Chris Swift is here. He's with Swift Trading in Nashville. I look at that one minute, and I let you in the door, and we come back in here, and it's like 30 cents the other direction. It's like, what in the world?
Just throw it in my lap, and we'll dish it out.
It's Monday, right?
Yeah, that's right. Exactly.
This is nuts. Okay, and we're just getting into the growing season here.
Yeah.
What is going on?
There's a couple of factors, weather being probably the first one, and some people that got rain really needed it, and that will help the crops that are just fixing to go in the ground, maybe a little delayed planting, but nothing really more than, benefiting the subsoil moisture. And then, as we talked about the wheat, probably too little too late for the wheat market. So it's still on its move to the upside. But we've got outside market factors with China and their issues that they've got in their lockdown for the COVID. We know that our U.S. dollar index is up strongly against all the major currencies, making it a little bit more difficult to be able to export a lot of those grains out of there.
Well, here you have that U.S. dollar index you just referred to. And, when we came on the air here, it was up just about 600 points. And there it is, 612 points higher at 103.57. Now, it's intriguing to me, when we came on the air on the Market Day Report, we were blaming the sell-off in the wheat on the rise in the dollar, and now the dollar is still sharply higher, and the wheat turns around 30 cents. So,
right.
I mean, there's more at work here, apparently.
Oh, there's lots of things at work, and it's not just one thing. We've all been climbing this hill, and maybe we got to a point where we needed to back up just a little bit to get a running start again.
All right, interesting stuff. Well, we're going to catch our breath here, and we'll come back and we'll see what the livestock trade thinks of all this. The corn market has not turned around when the wheat did. We'll see what the cattle and hog markets do right after this. All right, well, we are back with Chris Swift, and he is with Swift Trading in Nashville. Overall, how much impact do you think the grain trade is going to have on the livestock? I'm going to put you on the spot here. Given the moves we have already seen here in the grain trade, or do you think livestock are in the process of trying to find a bottom anyway?
That's a good question. I don't think it's going to impact them too awful much, simply because of the reason we have really, really high input costs, and none of those input costs are going down. They may be down a few cents today, and crude oil's down a little bit, but in the overall spectrum of things, we are significantly increased in input costs. And so I think going forward, we have to address that, and it doesn't look like there's going to be much of a break just yet in those grain prices or oil prices. So I think the meat market's in for a little hard pull right now.
You do?
Yeah.
Okay.
I think it's going to be tough on producers.
Well, should we take a look at prices?
All right, let's do it. I know they're going to be a little higher, of course. Let's
go to the big board. You might be surprised. Okay, here we go. Live cattle, we have June trading 95 cents higher. We're at 133.60. The August contract now, well, it was half a dollar higher. Now it's only 37 higher at 135.65. So it seems to be maybe eroding a little bit here. October is now 62 cents higher. Moving on to the feeder cattle, they are the ones that are watching with keen interest what's going on in the grains. With the corn market still lower, even though it's off its lows, we have feeders still sharply higher. So, Chris, should I go with August here?
August, yeah.
August, okay.
September,
Let's go 275 higher on August at 171.02, and that's within about 55 cents of our high of the day. It did go down and hit 169.62 before bouncing back about almost $1.50. We have the September up 287. Look at that. All the contract months are at least $2, if not over $2.50 higher. The most strength is in the nearby contracts. Then you get to lean hogs. Well, we had the June contract. Remember, it was within about, 15 cents ago and limit down on Friday. This morning, follow-through selling, June lean hogs down 287 at 103.50, and July down 297 right now. 103.50 compared to where it had a high at the open of 106.75. You do the math. I mean, we're, $3.20 off of that already?
Yeah.
What do you make of this lean hog trade?
Well, a lot of it's our export business. We've been dropping off severely in our export business for hogs. And, of course, this will be the 7th quarterly hogs and pigs report that has showed a decline. So maybe we're pretty much done with the liquidation side of the hog. But we know that China's in lockdown. They're not using as much pork as what they would be if they were wide open. So the combination between that and clearly the increase of pork production in China in that controlled environment has helped them to increase their production tremendously.
Okay, well, thanks for helping us navigate the waters here on a crazy day.
Wish you could have done more.
It is a Monday through and through, so thanks for all the help. Chris Swift of Swift Trading in Nashville. Janet, with that, it's all yours.